Welcome to the leading edge of thought. This particular video is not going to be shared publicly. It's simply for my own private network. And you'll understand why as I explain it. I mean, you may want to share it with people you know personally, but it's not for wide circulation. And the reason is it's Larry, who's become a great friend of mine. He's a client, and he's been using artificial intelligence for 30 years. He's been using these algorithms, and more recently, due to the advances in computer processing powers, he's got this AI software which does foreign currency trading. And he allowed me, because I'm a friend of his, to start an account with a broker. So I didn't pay him any money. I put some money in a brokerage account, and with my own trading account, I simply plugged it into his software, which sits on the broker's server. And within the first week, it made over 5%. And you'll see as we take you into the back office. So the interview I'm doing with Larry in this video, he's going to share some of the back office and how it works. It's just amazing. And so the thing for me is it's that the AI software, it's so superior to even some of the most successful human traders, because it doesn't get emotional, which is one of the reasons people lose money trading. It can scan thousands of opportunities in split seconds. It can execute quickly. So it can take advantage of opportunities that a human couldn't possibly do. And the thing I love about it is I haven't got to learn everything about how the currency markets work. And actually, if the stock market's booming or if it's busting, that doesn't affect, because currency pairs are always trading against each other. So it's kind of recession proof, etc. So because of this technology, you don't have to be an expert, and I'm certainly not. And so I'm really looking forward to sharing what Larry has to say. And if you're interested at the end of it, you might want to contact me or give me your feedback. But let's, without further ado, introduce Larry.
Hey, Alistair, good to see you.
Great. I'm looking forward to doing this video, and I'm hoping it will really shed some light on the kind of AI algorithm opportunities that exist in the trading market, which are pretty amazing. But before I start, I just want to let's remind the people in my network who this video is for, how we met. And you were doing a project called Eden Eco Solutions at the time, and how that kind of thing is really important to you.
Yes, it was completely outside of the financial space, wasn't it? We met at a business network, and I had decided to join the network to promote the work of a then business colleague who was doing some amazing pioneering work with waste to energy. He'd spent a lot of time in developing countries, and we shared a concern, which was to do with the amount of waste that these countries developed that just was never ever being dealt with, just literally stored for years into piles and then mountains and then acres and hectares of rotting methane generating garbage that eventually people lived on and spent their whole lives in. My colleague Martin had developed this waste unit that could be put into a container effectively, and any number of those units could be transported to where the waste was. The problem was, of course, you couldn't move those millions of tons of waste to some central plant in the middle of the country. It just wasn't feasible. And his idea was let's just not get through the waste, but let's use it to convert energy for people who often haven't got enough electricity anyway. So so I started working with him and trying to find ways to raise finance for him and connect him to the right people. got very, very enthusiastic about that, as you know, because it's a subject that's close to my heart. I've got, you know, 3 young children myself, and this sort of thing affects their future. Yeah, so that's where we met. Unfortunately, you know, before that project could come to fruition, Martin very sadly got a sudden brain hemorrhage and died some months later. And I wasn't able to carry that work forward because he was the genius and the scientific brain behind the thing. And yeah, just wasn't able to keep it running or find someone to take it on.
Yeah, that was yeah, it was a real shame, and I was looking forward to working with you both. And when that happened, and it was such an exciting project, and yeah, I'm sure that yeah, there are going to be hopefully some other opportunities like that, because I think, you know, the leading edge of thought is about those kind of technology solutions. And you know, we have a leadership crisis in the world right now, and we also have a toxicity crisis.
Mm-hmm.
And things like that, you know, converting all that, you know, harmful waste into clean green energy and making it non-toxic, I think is just an incredible thing. So yeah, with regard to going back to your FX career, um, you've been in it a long time, haven't you? And you got into algorithms a long time ago. Can you just tell us about that journey that you went on there?
Yeah, so we really do go back some time. I guess we're going back to the 1980s when I first became interested in algorithmic trading. I did some work with a company called Futures Truth back then, and they were based in the States. And I was so fascinated by this monthly magazine they produced, which basically tracked the performance of some retail automated trading systems that were being developed, but they were very, very rudimentary at that time. You know, like applying moving averages to price charts. But what was unique about them was that whatever analysis they did, they were able to then translate that analysis into orders to a broker, so that the system effectively could generate trading signals that would interface with a broker, and those trades would be executed automatically. And in those days, the markets were not as sophisticated as they are now. You know, soybeans went up massively and they crashed massively, and it was mainly based on commodities, soybeans, orange juice, pork bellies, gold, silver. It was a fascinating world because I'd come out of a, you know, much more traditional financial services, you know, unit trusts and pensions and that sort of stuff. And I remember one day I was trying to, I did a lot of work with directors and producers and film technicians because that was my father's background. And so I used to hang around the film studios. And this particular day, I had a meeting with a producer. I think I was wanted to make a good size investment. And there's me presenting all these traditional things, and he was saying, but that's not very exciting. And there's me projecting within the limits of what I could legally project, you know. And he said, but haven't you got anything more racier than that? And in the end, I just, in exasperation, said to him, well, how much more racy can you get? What have you been looking at? And that's when he told me that he had some commodity trading accounts in the States with CTAs, as they were called, commodity trading advisors, who were trading in these sort of exotic markets. And I thought, wow, this is amazing. I knew nothing about them. But that opened the doorway for me to become interested in what you might call alternative investments, i.e. not just buying stocks and shares or pensions and this, that, and the other, but what else can you do that is more, it might be viewed as a higher risk, but definitely higher return. And from that, I progressed into this fascination with, well, how can you automate traded decisions in these markets? As I say, that was in the 1980s. I then was headhunted and had this amazing job with a company called GNI. And I was one of the first really to build systems, quantitative systems, to try to analyze the performance of traders
Mm.
you know, because lots of traders are successful because they're lucky. You
Mm.
know, they just happened to be in the right place, right time, the market went the right way, and they had the right position.
Yeah.
Next year, you'll find they're the bottom of the chart.
Yeah.
And what we were trying to do, and what I was tasked to do, was interview these guys and see if they had a sensible story behind what they did, and B, try and put some form of analytical tools together to evaluate them more objectively, so that the company could decide whether they wanted to give them funds or not. And so that was my role. And I learned an awful lot in that role, but also got exposed to some very interesting people. Hence my connection with Futures Truth, hence the door opening to my interest in automated systems. So that's where it all started for me.
Mm.
And it's I guess it's a love affair that's just never ended.
And of course, yeah. I guess one of the big things is that with although algorithms, I think I've mentioned to people before, you can go right the way back to Alan Turing with the Enigma code, um, which was fundamentally a form of AI. But it's the recent changes in the last few years is the processing power of computers, which have enabled the capability to go to obviously another level. And I guess that's why, you know, there's still a massive lack of awareness as to the kind of things that results you can get with something like FX trading, I guess. Um, yeah, I mean, I'm just going to share with people. I mean, when I sat down with you, I was in a hotel in central London with you, wasn't I? And you showed me over your shoulder, you showed me your back office, which we're going to share a screen in a minute for. But I just want to share with people listening, you know, I got so excited about that. So I've always kind of had this fantasy about having a trading account. And I had two trading accounts over the years. I had a stocks and shares trading account of my own, and I had an FX trading account. And you know, I achieved very little with those two accounts. What I came to realize is I didn't have, whether you call it the personality, the inclination, understanding all the data, going through all the data. You know, there was a lot of discipline. You had to be a very analytical kind of person. What I found is that many people dabbled in trading and had their own trading accounts, but only a small percentage succeeded. Because most people just don't, you know, for different reasons, don't have the right. So it could just be a personality thing, or you know, sometimes they just find it boring, or you know, whereas the people who are successful generally love analyzing data and those kinds of things. And so when you show me your back office and you explain to me that these people simply started a trading account and that your AI software was doing all the trading for them, so they could just sit back and watch and they didn't have to do anything. That's what got me really, really excited. So if we could share the screen, and you know, you can show us some of your back office.
Well, before I do that, Alistair, let me make a couple of comments on that,
Yeah, sure.
because it's a really interesting point. The stats for successful trading are not good.
Mm.
You know, less than 5% of people have any measurable success in trading the financial markets by themselves. When you look at fund managers these days, certainly in the traditional retail space, most of them are happy to keep up with the average. And that's why we've got things like index funds, you know, which are not trying to do anything better than at least give you what the stock market does.
Yeah, like the FTSE and the S&P
Exactly.
500. Most fund managers don't match that. You know, yeah.
Exactly. And then when you move out of those more traditional areas into areas like foreign exchange or trading commodities or you know, precious metals, probably the stats are even less. Many people are drawn to the attraction and the potential freedom of being able to make money in these markets and work for yourself and have your own time.
Mm.
But the sad truth is that the emotion of that involvement and the ability to consistently you know, the story for most people is they'll go out, they'll buy a book on technical analysis or up recognizing chart patterns, and off they go. Or they'll go along to some weekend seminar, pay several £1,000s to be taught how to do this and mentored, and then they think they've got it, and off they go. And whichever route they've come, most of them lose money.
Yeah.
And some of them end up blowing everything. So dealing with the emotions, having a consistent approach, whether they're discretionary trading or whether they discover some form of automated system, even if they have automated systems, most people can't stick to them, even if the system's successful. The challenge is,
and then you've got human error as well. I've heard some horror stories of people forgetting to put their stop loss in and things like this, or just making a miscalculation.
Or just changing things because the emotions overtake them. My system was wrong last time, so this time I won't listen to it, and of course it's right. And then they just get chewed up, because winning and losing is part of the process. So yeah, it's not easy. Not to say that some people don't succeed, but the point is that they are few and far between.
Yeah, you're absolutely right. And one of the few successful traders I ever met, a guy called Steve Linder, I remember him saying to me, I went to one of his classes because he also taught NLP, which I studied, and he said, here are the 3 golden rules of trading. He said, number 1, if you get emotional, you're screwed. Number 2, if you get emotional, you're screwed. Number 3, if you get emotional, you're screwed.
yeah, I'd concur with that.
I think what you might want to explain to people as well is there's a thing called a PAM, isn't there, which sits on the broker's server, and that's essentially your software, isn't it?
Yeah, well, maybe we should start there, just even before the distraction of the back office. So, so how this works is that, you know, I manage my own accounts. Okay, I don't receive funds from anybody else, but I manage my own accounts. But with modern technology, an individual is able to connect to the broker that I trade with through something called a PAM. And it's just to get technical, it's a percentage asset management model. It means that whatever I do, they can connect to my PAM and they will get the same trades, i.e. from the total that's now being managed, which their balance gets included in that, and they get a percentage of the trade that reflects their own trading balance. Nothing comes through me. I'm not touching their money. It's in their own segregated account at the recommended broker, but and which they have full control over. But the point is, they receive directly the trading signal that I'm actually executing on. So their account grows directly in proportion with my own. And any number of people can do that, and you know, from the amounts that are specified.
And of course, there's a performance fee, which is automatically, you know, but they only pay if there's a profit.
This again is really important. So I want to make the contrast that with most managed systems that, you know, people are used to, that, you know, they go and put money with some huge, you know, international money manager. They'll pay a management fee just for the privilege of them looking at their account. And even if no money is made, fees will be paid. So how this works with a PAM is that only if there are profits made each month, new profits, then based on that profit, a percentage, depending on how big the client's account is, ranges from 30 to 40%. Of the profit only, is, you know, then that's the fee. Okay, if there's no profit, there's no fee, and if there's a loss, that loss has to be made up before any new fee can be charged. So it's called a high watermark. Imagine, you know, water pushing up a beach, and each time it makes a new watermark. Well, that watermark has got to be beaten by new profit before another charge can be
So
made.
you really are
Very fair way of
you really are only paying on profits. And
exactly.
you know, I can remember, you know, so the first week of my account with you, I made a net gain in that first week of just over 5.9%, which is pretty, and that's with the reduction of the performance fee as well.
Well, no, just to correct, let me correct that. The
Yeah.
performance fee isn't charged until the end of the month.
Oh, it's charged at the end of the month.
Yeah,
Okay, I
it's
get
not
that.
charged weekly.
Okay,
Hmm.
okay, that's charged at the end of the month. Okay, I get that. But it's still pretty healthy return in a week.
Sure.
Okay, so
And
so you know, for me, that's the thing I like about this, because I saw a guy recently who paid 8.5%. He lost 8.5% on his fund and paid a management fee on top.
exactly, you
Yeah,
pay the management fee,
yeah,
whatever.
yeah.
So,
Great. This looks interesting.
yeah, okay. Well, this is a standard price chart. This happens to be the British pound against the Japanese yen. Um, the strategy I follow trades a number of global currency pairs that are highly liquid. They globally, you know, they transact in the billions, if not trillions, sometimes
Yeah.
in total. And the system basically is analyzing every single price that goes into making up a chart like this. And 24/5 is making a decision as to what to do. Okay.
Mm-hmm.
And it does that without any emotions. It does that consistently. It does that across 7 currency pairs. There's a very unique strategy behind what it does and why it does, which I obviously am not going to go into in great depth. But what's different about this is that it doesn't matter which direction the market moves. The strategy has an application for any scenario, and there are many times that it just stands aside. There are times when it's very active, and there are times when it's very low in activity because of the market patterns. You can see these markets are very volatile.
Yeah.
You know, huge movements in any direction at any time. And you can understand how difficult it would be to try to imagine where this is going on a discretionary personal basis. So that's just a price chart. You can see various lines being drawn and arrows. They're all automatically generated by the system's internal analysis.
And just covering on that point, Larry, about currency pairs. So you've got 7 major currency pairs that your software trades in, and
Yes.
it's so, because people always worry about, oh, the market crashing, and what they're talking about is the stock market.
Yeah.
And it doesn't matter whether the stock market's booming or busting, currencies are always trading against each other. So the profits being made here are on you know, buying and selling
Yeah.
at the right time. Yeah.
This is trading. This is not
Trading.
investing.
Yeah,
In
exactly. It's
that
trading, not
sense.
investing. Yeah.
Okay. We're not buying pounds and hope that they become more valuable.
Yeah. You're trading. Yeah.
We're trading. So we're seeking to profit from the ongoing fluctuations in price, up and down, between the world's major currencies.
So interestingly, when there's more volatility in the market, there's more opportunity to trade profitably. Would that be true?
Yes, yes. I mean, obviously, if it's a flat line, or even just a line that's just going straight up, that's not what this is. That's not realistic. It's not going to happen. But that's certainly not what I'm looking for. You can see I've just switched from the pound against the yen to the dollar against the yen, and you can see completely different price chart now. So all of these, this is the Australian dollar, again, different price chart. They're doing,
and basically what you've embedded in this is you've taken your understandings of the market, and you mentioned about all the people you interviewed years ago and all of that wealth of experience of knowing how signals work and what indicators there are, and you've created these algorithms, these highly complex algorithms, which can all be run in split seconds. And the thing that also impressed me is, because I can remember when I tried to have a trading account of my own, how I had to try and go through so many hundreds of charts. I had to scan all these charts every day manually to
Hmm.
try and find an opportunity.
Yeah.
Whereas this can do thousands in a matter of seconds, can't it?
Yes. Well, it's scanning every price input into the currencies I'm looking at, and that's obviously across the board. That's in a fast market that can be thousands and thousands of inputs per minute. Something else that's important to show, if I can get to the right place, is that I just minimize this. Okay, so here you see a like a master engine.
Yeah.
This is just a little snapshot of a number of accounts, and where I can see everything at once. Everything is controlled from behind the individual accounts, and I think what's really, really unique is that it means that every single PAM, whether it's traded aggressively, whether it's
So if you can explain to someone looking at this for the first time, what does this data represent?
okay, well, this is some of it is quite proprietary information, so I've got to be careful.
Yeah, but just in general terms, without giving
Yeah.
away any.
But in essence, you're seeing on the you're seeing the servers, you're seeing different brokers, you're seeing whether the account is active or not. You're seeing a number of account balances. You're seeing a snapshot across of every account of the balance, the equity, the margin, how much margin the broker is requiring for every account. And it means that I can synchronize accounts across different brokers. There might be different brokers who, you get slightly different results on, and all of that can be modified, if you like.
Okay, and I remember when I was with you, I don't know what you can and can't show, but you showed me some of your high net worth clients' accounts live, and their performances over, say, a 12-month period. Is there anything you can show on that? Because obviously, I mean, obviously, if you pull up, if there are any names, I can blotch them out on the video. But is there anything you can show me there?
That's well, I won't show that, but I'm trying to get back to. I think I've probably lost the page now.
Yeah, obviously, I don't want you to show people's names because there's obviously confidentiality there. But I was really impressed with what I saw.
Well,
yeah,
I think that why don't I show it this way? This is
okay.
probably the easiest way because this shows more information. So yeah, let me explain this. Yeah, this is the best thing to look at here, Alistair.
Okay.
So this is a statistical tracking site that receives every trade from whichever accounts I ask it to follow, and everything is recorded in here. Okay, so this particular account is important because it is my master account. This is a demo account, but the way my trade management works, demo simply means that this receives the same prices, etc., but I don't have to put money into this account. It executes and then records the trades. But those executions are the same executions that I send to all of my live accounts. Okay, right. So this actually is the account that controls my trading for another account. What then happens is that it might be that, you see, this is quite an aggressively traded demo. But it might be that I run another account, another PAM, which is conservative, and therefore I'll adjust the weighting of the signals so that it's not as aggressive. It'll take the same trades, but maybe smaller in proportion to the capital. So what you're looking at here, for example, this goes back to, I think, August last year. Yeah. So that's from January. So you can, if I click on 2022, so you can see there's a losing month. I want people to see that they're possible, not very often. But there was a losing month of 2.5%. Then we went up by 1.5%. And to be fair, I was just bedding in the system then. And then when we went full blown in October, that's been more representative. Again, I stress this is very aggressive trading.
Yeah.
But these are the sort of monthly returns we've had.
So the one that I'm on, the PAM that you've opened up for me and the people that I know, um, is that to date, is that similar kind of numbers?
That is following the aggressively traded account.
Yeah.
Yes.
Okay.
So,
and I think you're right. I think it's important to say, look, you have had a losing month, and that people are aware of that. But yeah, it's
okay. So that was 2022.
Yeah.
Jumped to 2023. And so here we've got January through to October to date. Important number of things here. Look, you don't get consistent results every month.
Yeah.
The market moves differently, the opportunities are differently, the analysis the system makes differs from month to month. And so, you get what the market gives you. Basically, if it's very volatile with a lot of movement, we've had some big months, exceeding 20% growth in a month.
Yeah.
Gross.
And of course, October's not finished yet, so
yeah, so
we've still got some time to go on October.
But this is real trading. Real trading looks like this. Real successful trading looks like this. You can, make hay while the sun shines. Other months, I mean, look, hey, we only made 4.81% in February. Well, that's in a month. Most people are not earning that in a year.
Exactly.
So it's good to remember that. So that's important to look at these numbers.
And the other thing that's worth mentioning is that it compounds, doesn't it? If you unless you decide to withdraw the money, you're if you look at that across that year, it's a lot more than just the percentages added up, because you've got to compound it each month.
Right. So in actual fact, since August last year, including those losing months, this account has gained over 330%.
Wow, since when?
Since August last year.
August last year. So we're talking just over a year.
And that means nothing has come out. All the new performance has been used to generate more profits. Now that might not be
that's almost amazing. That's just crazy, isn't it? And I think the thing for me that when you showed this to me that really got me was the fact that my initial lump sum, I'm not giving it to anyone. I'm simply putting it in my own trading account. I'm not, normally when, people are talking about getting good returns on something, you've actually got to, send some money to somebody else, and that's,
you've got to send money to the broker, of course.
But it's in an account in your name, which you can withdraw at any time. But normally you have to send some funds somewhere where, if you want the funds back at any point, there's usually a load of restrictions and controls, and penalties or whatever. And that's what really got me about this. Is that's what sets this apart. So can you just explain a bit more about on how you manage the risk with, because a lot of people may not know about, say, stop losses, for example, because that's all, you've got algorithms that run all of that. So just explain a little bit how you mitigate risks when you do the trading.
Okay, well, just prior to that, I want to really be transparent here. People are looking at this chart. If you're looking at this chart, you've got to notice some things, because eyes are always drawn to the shape of this. It goes up. Wow, that's nice. We've seen some monthly bar charts. But notice too, there's again, this is an aggressively traded account, and there's no guarantee that past performance, etc., etc. But what does this number here mean? Drawdown. It means that at some point, and actually it was right at the beginning when the thing was being set up, but nonetheless, when you see a drawdown figure, what it actually means is that yes, it's achieving an average of 11% per month average. But at some point, there's a drawdown, which means it could be just in open positions. So this has had a drawdown of around 20%. And that means that peak to valley in that equity curve, at some point in time, there's been a drop in drawdown. Now, that was still within the program's
management. Can you explain what drawdown means?
Well, it means that at some point, the equity has dropped from its peak by 20%. It could well be that the positions were still open, i.e., the trade was still in process, and the system hadn't decided to close those positions.
And I guess that's the other advantage about AI is it doesn't get emotional and it stays patient.
Yeah.
So
you know, sometimes there are economic shocks and silly black swan things that no one foresees. There's a tsunami, etc., etc. And in those situations, you know, prices have a knee-jerk reaction, probably go globally. The system is intelligent enough to give this time to sort of settle and get back to normal. Could be that it's very profitable during that, but if the market has a shock reaction against its norm, then the system will analyze as the market settles back into its normal behavior. And that's, you know, why it has to have some space, and people have to get comfortable not just watching every 1% up down of their results.
I mean, it's one thing I remember from when I traded is people used to give it a slang name of a bungee, where you've got something trading at a certain value, and then just usually, you know, for very briefly for a day or two, the price dropped like a stone. They got stopped out of their trade, and then the price recovered and carried on going up, and they
there's a lot of manipulation amongst you know, big banks, etc., etc. They manipulate the markets a lot. That's why, you know, it can get really difficult for a personal trader just battling this on their own, because that sort of thing happens all the time. One other thing that's important here is, as you can see on this bit of analysis, it's showing you the average duration for which trades are held. And you can see that the majority of trades are actually within a day, the positions are closed. That's the majority. But then we do see trades pushing out to being held for 3 or 4 days. And then occasionally, you know, we're stretching into days, a week, or even longer, but it's very, very rare. So this would be described as short to medium term trading. We're not holding positions for seconds, and we're not holding positions for months either.
Very interesting.
You asked about managing risk. Well, this is part of risk management, obviously. And risk is managed at various levels. In the first instance, the program is looking at the price action and the price movement. What is the structure of the price doing? And it's making decisions accordingly. It doesn't panic if the price moves against it. It might just hold that position longer and see what the market starts to do. It might actually open another trade because, you know, the analysis is that price is getting weaker and weaker and is likely to do the bungee. So we want to be on the right side of that. Stop losses, it uses them, but differently and internally. It doesn't just put random prices in the market and say, if it moves beyond this, I've got to get out because the pain would be too much and I couldn't take anymore. There's got to be a reason for everything you do. And that's how this strategy works.
Taking the emotion out of things is key, isn't it?
Now, at the ultimate end, we set a stop loss at you know, at account level, you know, so that means that in effect the account, I think we're running at about 30%. That's just like an emergency Hail Mary all in stop loss. Let's just shut down and reevaluate. I mean, look, that's the sort of, oh, we hear that Mars have sent Martians to invade Earth type stop loss.
The Martian stop loss.
But in effect, the system manages the trades rather than just, it's not just a bet that says, I think it will get to there, and if it doesn't get to there, I'm going to get out here. Most people who use stop losses in that way, they just give their account to the market, because the banks can see those stop losses and they move the prices around so that they hit them. And that's why people have had the experience of putting stop losses in the market. And it's like the market has eyes. It went right to my stop loss, took it out, and then bang, it went back to where it was going. And that's exactly what happens to thousands and tens of thousands and hundreds of thousands of retail traders. So we don't play that game with the markets. but
Yeah.
we do manage risk internally within the system.
So yeah, I mean, the other thing I wanted to ask you was about so this people have an international account here. Is it open to I mean, it's open to people in the UK. What other people in other? I know you've got clients in other European countries. Um,
Well, this is the broker's requirements, not, of
yeah,
course, mine.
yeah,
So the international account is open to pretty much anyone globally, but there are countries that are excluded. The United States, American citizens can't come into this unless they have some offshore company that they can come in through.
yeah,
And you know, there are some countries on a banned list that wouldn't be able to trade. But for the most part, we look at the international account because it has got way less restrictions. It's worth mentioning that this very large global broker has an FCA regulated arm in the UK. So they're a very big and respectable company, but we do not trade through the FCA regulated.
yeah. You're on the international side of it, and
because it gives much more freedom. It gives higher account leverage. It means you can come in crypto.
Yeah, that which is what I liked. You can both pay in and withdraw using crypto, which is I can't
which
think
you can't
kind of
do through the UK.
Yeah, and I mean, what's interesting I haven't mentioned about your background is you were also involved in crypto in terms of currency trading, and I think one of the challenges with having a crypto is there's obviously a lot of volatility and opportunity, but is the volumes are not very high in crypto yet compared to fiat currencies. So I guess that's one of the challenges with if you apply this to trading in the crypto markets.
Yes, but this system is designed for what it does. You can't just take it and then trade it in crypto. That would be a completely different system.
Yeah, absolutely. But this is because you've got such high volumes in fiat currency.
Absolutely,
it's just
we're
a more
talking
stable.
Trillions.
Yeah,
I think the current number is 5 or 6 trillion per day. It's the largest and most liquid market in the world. It dwarfs anything else. It dwarfs stocks and shares. So there's no problems with liquidity here. And we're not in this system trading illiquid currencies either. We're trading major ones. So currencies can't go to zero, can they? It's not like, oh, I bought
exactly, because they could be devalued. I guess that's something that might happen.
But the currency can only be devalued against something else. So if the Japanese yen uses value, it means that the dollar or the euro or the pound is gaining value. That value just doesn't disappear. It goes into another currency. Hence the beauty of currency trading. There's always movement.
And always opportunity.
And opportunity, yes.
Yeah. So I think in terms of this I've got to say thank you, by the way, because obviously when I saw what you were doing and you said to me I could have an account, and you've even set it up so that if people I know personally, because obviously, I mean, it's interesting, we can't put this on a public platform because even though it's not investment as such, because you're not literally parting, you're not writing a check out to some third party and sending it off somewhere. You're starting your own brokerage account. So it's kind of interesting that, and as I said, I'm not a financial advisor and I wouldn't give anyone financial advice. But it's, if people want to know more, obviously they can speak to me, and I have I can help them and do all that side. Because obviously when I spoke to you, you were showing me all these high net worth people had all this money in, and it's like, well, they're the people I deal with. And I said, well, we could take this out to loads of people. And you were like, yeah, whatever, and so that's kind of where I can obviously, and I think it's great. There's people I know who are really concerned about, what's going on in the wider financial world. My two boys have, they had, well, I got an account as well in Metro Bank, and Metro Bank only just recently was in financial trouble. We've got 3 banks in America. We've got Credit Suisse. So there's a lot of uncertainty even within traditional banks. And so, I think being able to diversify and being able to generate a healthy income, having opportunities. I think those are the two things that I'm looking at the moment, particularly with all the craziness that's going on in the world. So, yeah, I just think it's a really good opportunity for people to, it's something they can look at. And yeah, I mean, one thing we talked about was doing a quarterly newsletter, didn't we? To anyone who wants to get involved, we can do a quarterly newsletter telling them about the performance of the AI software and other training tips and information.
Well, I think it's good. It would be good to. I mean, this is a private thing.
Yeah.
I'm not an investment advisor, although I've worked in investment management all my life. This isn't about giving people individual advice, but education about the markets, about where Forex sits, how Forex gels with crypto. I think it's important for people to have alternative and deeper views, because we're fed stuff that's so shallow.
Yeah.
And I, me, I'm very much one for
very
education.
awake. Yeah, very
education
awake.
and awareness. And
what the mainstream spoon feeds us.
Yes.
There's a completely different world out there, isn't there? And the same is true in the financial markets. We know it applies beyond the financial markets very much so. And so, this is, very much fits into my theme of what I help people with, which is the leading edge of thought, which is expanding our minds and seeing that there are these other opportunities.
Yeah.
And when you do that, they're very substantial, these opportunities. But if you just stick your head in the sand and just go with what you're being spoon fed in the mainstream.
Absolutely. The system conditions us to believe that what they offer, the few percent per annum, and it's right to pay management fees even if people aren't making money for you, because these people are experts and they have certain letters they can use, etc. Meanwhile, the banks and other financial institutions, they do this stuff. Okay. And they make a fortune out of it. So this is really just opening up people's minds to think differently, to look up, down, and sideways, and to make individual decisions outside of the box. Okay. Because if you want to stay inside the box, then that's where you're going to live.
Yeah, absolutely. And the thing that will wake some people up, and has already, is the fact that we have had some of these big banks. I mean, my sister lives in Switzerland, and she was absolutely stunned when Credit Suisse effectively went under. I mean, they were bailed out. And there are so many banks right now where people think their money is secure, that are over leveraged. And if the books that were not being cooked, people would realize these banks are technically insolvent.
Yeah.
So, so I think people do need to open their eyes and see beyond what they're being fed by the mainstream. So, it's been great, Larry. Thanks for this. And I'm sure, I'm looking forward to doing the first newsletter with you, and sharing more. And obviously, I'm going to be speaking to just people in my own network that I know about this. And I hope they, I don't have no regrets in getting involved myself, and already seeing the fruits of it. And just thanks for all you're doing. And it's going to be great for me, kind of being the introduction conduit, if you like, to people doing having an opportunity like this.
Okay, well, thank you, Alice. It's great to work with you. Look forward to having some of these guys and gals on board if they want to test the water. As I say, it's a third-party PAM. I don't have to have interaction with them, but it's also a way of meeting interesting people. And I know you've got some really interesting people in your circle, so it's possible.
I'm sure some of them will want to meet you. So we'll have to set something up.
So it's possible that one day we'll do something.
We will probably do something.
Yeah.
Maybe a Zoom call, maybe a face-to-face or whatever. But that will no doubt happen with a lot of people I know will want to meet you. So
sure.
thanks, Larry, and I look forward to seeing the whole thing progress further, and I'm sure it will. Thank
All
you.
right. Well, thanks a lot, Alistair. It's been good. Thank you. Appreciate it.
Cool, Larry. So I hope you enjoyed what Larry had to say, and looking at his back office, I think it's really, really remarkable. And I'll be following up with people who I've sent this video with. Please, if you're interested, just send me a message on this email address below if you want to know more. And what I thought I'd add as well is a email that Larry sent me. If I get it up here, this was this Forex trading championship is a global event, involves thousands of people, and this was an email that Larry received fairly recently, and they say that one of his this is his FX, the PAM service is the thing he's shared in the video, which is the performance allocation management module, which his one has, from June the 25th to, I think it was the beginning of this month, to the end of September, this account got a 35% gain. So that places him in seventh. This is a global ranking. And in terms of the PAM ranking, and that's the thing that I've plugged into, and that, he's allowing me to introduce people to plug into, the performance of that is second in the world. I mean, that's pretty good. Now here, this is a continuation of the email, which these are the three packages which Larry has allowing me to introduce people into personally, if they want to start a Forex account and plug into these one of these three packages. And you see here that that's the amount you'd invest, and there's a performance fee, so that's taken off your only off your profits, not off any, if there's and if there's a loss, then the following month you don't get anything taken off your account. So it's only off your gross profits is that performance fee taken. And with the numbers we're talking about, we're talking about really sizable returns. So yeah, just contact me and let me know if you want to know more. And yeah, just any questions you've got. I say I'm not giving any financial advice here. I'm simply telling you what I've done. And if you're interested in finding out what you can do, then yeah, just contact me and I'll let you know. So yeah, I hope you've enjoyed the video and look forward to speaking with you soon. Bye.